Hey everybody, we are well into earnings season. You've heard me talk about all the bank earnings, but don't worry, I'm not going to bore you with banks today. We are going to talk about Alphabet, the first of the Magnificent Seven to report its second quarter earnings. And at first glance, they were good. We're going to dive into the numbers. Before we do, take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from my sponsor, The Motley Fool. It's the best way to support this work we are doing on YouTube. Again, that is fool.com/Frankel. So I'm joined by Lou Whiteman today, who's one of my favorite fools and a lot taller than he looks on camera. I noticed when I met him in person. Um, so it, by looking at it, you can't tell. He's got a good half a foot on me. But
it's the hair.
It's,
oh wait, no, it's not the hair.
Hey, give me time. I'll get there. But so at first glance, Alphabet's earnings look pretty good. They beat expectations on both the top and bottom line. Their revenue grew by 14% year over year as the ad business generally rebounded. Another interesting statistic is that the Google search business surpassed $10 billion in quarterly revenue for the first time ever, $1 billion in quarterly operating profit. And the biggest weakness I saw, which is ironic because you're watching this on YouTube, is that YouTube ad revenue was a bit weaker than expected. It came in at about 8.66 billion versus an expectation of about 8.93 billion. Not a huge miss, but a significant one. And a lot of investors are worried that that they're facing a lot of increased competition from platforms like TikTok. I don't know, Lou, what is your sense of this quarter and how's the stock reacting, first of all?
Yeah, I think it was down about 5%, but it's recovered a bit, so it's down 3. But yeah, I mean, the funny thing about that, Matt, is that I mean, I'm an old, and I didn't just discover TikTok, right? TikTok's been around for a few years, so kind of, I think it is. Yeah, I've seen that too. I don't mean to criticize you because I do think people are saying, but I mean, it's we see the results and then fill in our narrative. And to me, this looks like a darn good company with a darn good quarter. I mean, cloud, it's just some of the numbers are silly. Cloud revenue exceeded $10 billion in 3 months.
And that's
$10
a small
billion.
part of their business.
Yeah. But, but look, when a stock is up, I think, almost 50% over the last year up it's like, it's almost, I do think that we are sort of just seeing it doesn't just need to be perfect. It needs to be perfect, spit shined, all of that, all the above. And just, there is a natural flinch to, it can't go up forever. And yeah, I would hope, I mean, we talk a lot about investing in years and not quarters or weeks or days, but I can't imagine anybody looking at this report and saying, oh wow, I was wrong to believe in this company, or oh wow, this company is in trouble, because that just wasn't there.
You bring up a really good point about how much the stock is up. And it's worth noting that this report comes on the heels of a first quarter report that was perfection. It was great, as you just put it. Um, just to kind of run through a few statistics from the first quarter, um, earnings and revenue both handily beat expectations. Revenue came in about 2 billion more than expected. YouTube revenue beat expectations in the first quarter. Revenue grew by 15% year over year. Cloud revenue beat expectation. Acquisition costs were better than expected. And not only that, but Alphabet remember they implemented its first dividend ever in the first quarter. They announced a $70 billion buyback in the first quarter. Their net income jumped 57% year over year in the first quarter. I mean, just I could go on and on with how good the first quarter was, but the point is that's a tough act to follow.
Yeah.
And
Yeah.
So these numbers were just like 90% perfect.
Right. And let's be honest, I don't think we're going to break any news here, Matt, if we talk about this concept, something called the Magnificent Seven, and about how the Magnificent Seven has sort of defied gravity over the last, how many quarters. And in reality, the actual real world economy outside of the Magnificent Seven is, I don't think it's terrible. I don't think it's great. It is a mixed bag of okay with uncertainty and all of that. And so if anything, I mean, if anything, even if things go south or go flat for the stock from here, it more feels like just the Magnificent Seven, or at least one part of it, rejoining reality. and reflecting the world that we have seen around us, which again isn't terrible. The sky isn't falling. We're not like looking at 2008, or I don't even think we're looking at 1999, the tech crash again, but it's not perfect. It's not mega caps going up 50% in a year. It's not going from $1.2 trillion in market cap to 2.2 or whatever they are right now. That is not the world we have lived in the last year. And so if we're just coming back to just understanding the reality that the other 493 companies in the S&P 500 are seeing, it is what it is. It's not everybody go buy a second yacht, but it's not reason to panic either, if that makes sense.
No, and I mean, there's a fair case to be made that out of all the Magnificent Seven stocks, Alphabet is the most attractive right now. Um, they're the only one that trades at a price to earnings multiple that kind of makes sense. They trade at 27 times earnings, which is, I think, completely reasonable for a business with that much cash growing at a 15% annual rate. I think that's totally reasonable. With a
Mhm.
lot of optionality, that cloud business, which is still in the very early stages, like they're the number three cloud provider. You mentioned the big headline $10 billion cloud revenue. They're the number three to Amazon Web Services and Microsoft Azure,
Yeah.
and are gaining share. And not only that, but the cloud industry is expected to roughly triple by 2030 as AI really progresses. So, I mean, a business like that trading at 27 times earnings, I could get behind that.
Yeah. And they have grown up. I know a bunch of these companies have too, but they have grown up and become, you mentioned the dividend. You mentioned just having really smart financial people at the other bets, what they're doing, and they're not abandoning other bets. We might get to that in a second, but just kind of the discipline they're showing there. It's a lot more of I mean, I hate to call it a sure thing, but there's a lot more predictability and sanity than there was arguably, say, definitely a decade ago or even more recently.
Yeah, and you mentioned the other bets, and one of the interesting things I noticed in the report was there in Google or what Alphabet is investing $5 billion in Waymo, the self-driving startup. Now, to put that in perspective, this is a massive company, so that would be like if you asked me to invest in your business and I handed you $50.
Mhm.
I mean,
Appreciate it, by the way.
right? It's not. For Alphabet, that's not a giant, a big piece of the puzzle. If they lost that $5 billion, everything would be just fine. But having said that, that's a big investment. That's more than.
And yeah, and not to interrupt, but yeah, in a time where they are no longer just throwing money at internet by blimp and stuff too. So
No,
where you do have to pass a threshold. Sorry, go ahead. But
it's
yeah,
true.
no,
No,
just
and
yeah.
I was going to say they're emerging as the winner in self-driving technology, and I'm saying this from the perspective of a General Motors bull, who is that's one of my top investments. I love Cruise. That's one of the reasons got GM really got on my radar. And $5 billion is more than GM is investing in Cruise on an ongoing basis. Um, Now, Waymo, unlike Cruise, which had to pause its paid ride service, um, Waymo is actually making 50,000 paid rides a week now. In San Francisco and Arizona, I believe, are the two big markets that they're operating in. So, do you, I want to ask you if the other bets segment could actually become something for Alphabet. What? Why are they throwing $5 billion into self-driving technology? Do you think it could ever return that much, even if it's successful?
So and the interesting thing is not whether I think so, but apparently they do, which I do. I agree with you. Is fascinating. I mean, yeah, the contrast with GM, it hurts. That 5 billion number on the same day that GM basically, I think it was what, a $600 million charge on Cruise, and said they are just, I don't know if they're giving up on the Origin self-driving vehicle, but they're just kind of halting that indefinitely. And we've seen this with Ford, where Ford has gone with their Argo AI, what they did, to basically now like, okay, we just want to make cruise control better. We've seen it. I mean, God only knows what's going on with Tesla, and it's right around the corner, I know, but autonomous is really hard. Waymo, the dirty little secret for the last decade or so inside the auto industry is that Waymo is better at this than most anything else. But to what end? Are we really realistically going to see a world where there is an ROI here? And I remain skeptical, but I just praised Google with their discipline and all that. I'm fascinated by the fact that they're willing to do this, because maybe my skepticism is misguided. Maybe they are seeing something here that there's a reasonable. I don't think I'm going to see a robotaxi in my life, Matt. Maybe around Vegas on a set course in the Strip or something like that. But I can't imagine me going from my house in Atlanta, Georgia, having to get somewhere in a car without a steering wheel in my lifetime. I just don't think that that is reasonable. I still don't think so, just because Google's throwing money at it. But if we are going, the premise of everything we've talked about, how smart they're getting with money, how disciplined they are, how they are focused on the right things, and they are putting $5 billion towards this thing that others are just saying, well, this is too hard for now. That really fascinates me.
Google's done a really good job. I'd push back. They've done a really good job of making things that I never thought would happen in my lifetime possible.
Yeah, that's true.
I never thought I could make money doing videos on the internet, if I'm being totally honest. And here we
Yeah,
are. I never
yeah.
thought that I would be able to use an Android phone to check to control my fridge's temperature downstairs. But I can definitely do that with a few clicks of a button on this. They're really good at that. So if anybody could do it, it would be a
Mhm.
very deep pocketed big tech company, like with expertise not only in self-driving cars, but in the cloud technology and if anybody could do it, it's Alphabet. So I'm really curious to see where it goes.
Yeah, I mean, still the real question is regulators and lawyers.
Yep.
I mean, that's the almost a bigger than the tech question is very hard, but but we'll see. Yeah, it's fascinating to see, and yeah, if anyone's going to do it, you're right. I'd probably bet on Google before I'd bet on even that other Mag 7 member that is also investing heavily in it. But we'll see.
All right. So thanks, Lou, for joining me. I want to challenge everybody to leave a comment. Do you think you will ride in a self-driving taxi in your lifetime? I'd love to
And
hear your
mind you,
thoughts on it.
no steering wheel, folks. It's
No
not just
steering
this
wheel.
gimmick thing, just no steering wheel.
No
Will you
steering
do it?
wheel, no driver, no nothing.
And not just on a set course on the Vegas Strip or something like that.
No, if that happened in my house in Columbia, South Carolina, I'd be very impressed. But
Yeah.
I'd love to hear what you think. So thanks for listening, and we will see you next time. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.